Hi, my name's Tim Munro. I'm the Managing Director of Change Accounts and Advisors. I have with me Nathan Smith, who's our Head of Wealth Management. What we're going to do in the next minute or two is briefly explain self-managed super funds and how they could apply in your circumstances. Now, we've been inundated recently with requests from clients who want more control over their superannuation, and they're asking us, should I have a self-managed fund and how does it work in my circumstances? First thing I'd like to say is this is not advice to you. This is just education on how super funds work and sorts of things you might need to consider. But please come in and see Nathan and his team, and they'll be able to give you a personally tailored statement of advice to explain how how you could benefit from a self-managed super fund. Now, in summary, a self-managed super fund has trustees, so that'll be a company with mum and dad or whoever you want. You can have up to 4 people as members of a self-managed super fund. Now, people normally go into self-managed funds when they want more control over their investment choice. So if you're not willing to put in the time to be an effective trustee, it's not worth doing, okay? And there's a couple other reasons why it's not worth doing, but if you are willing to put in the time, and we'll show you what needs to be done and give you checklists so you can work with us, then considering using a holding trust to buy a property is one very, very interesting option. Now, a lot of people with self-managed funds, you can buy shares, you can have cash. A self-managed fund can't borrow, but if you use a holding trust, it can borrow money from a bank and you can buy a property. Say $300,000, $400,000, you get the rent coming in, and that means that your money in your self-managed fund, you've got a larger gross asset value working with you in the self-managed fund. Now, if you did this, repeat it, and had 2 or 3 properties, by the time you're age 55, or even 60, when you can switch the fund to pension phase, that means when you sell off properties, there's 0 capital gains tax. And any ongoing income by the fund is taxed at 0%. And over age 60, everything you can pull out tax-free. So that's why self-managed funds are really, really worth considering, and that's why we'd like to talk to you about that. But Nathan, what are some other really, really good things about self-managed super funds we need to consider?
One of the great benefits is the flexibility inside the actual super fund itself. You can include insurances in there, clients' life insurance, disability insurances. Essentially, the premiums can be coming from the super fund itself. Another great benefit is the fact with estate planning, you can choose exactly where the assets this super fund holds, who they actually go to, without any issues over claimability from external sources.
You know, that's a really big thing, because that way you can send money to beneficiaries and it's not contestable like it could be with a will. And shares at the moment, what are clients doing self-managed funds and shares, Nathan?
Look, shares, you can hold direct shares within your self-managed super fund. Works exactly the same as if you hold a share account with an E-Trade or someone external. You can have managed funds in there, and of course you can have property, bonds, term deposits and cash as well.
Excellent. Well, look, please come and talk to us. We're here to help you. Self-managed super funds are something that are well worth considering for your retirement future.